Hey, good morning, everybody. Welcome to the Morning Vol Report. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to, let's just call it, I don't know, Monday. I can, Mark. Well, VXX and XIV are opposite products. Let me get back to this. Butterfly intensive course for Friday. If you're an Option Pit Live subscriber, member, or above, you get our Saturday courses for free. That basically makes our content, you buy Option Pit Live, and one pays for the other. Probably the best deal, in options education there is. Also, we archive all of our products in our store. So if you're Option Pit Live and you want to say, hey, I want to look at all this stuff, you get the library of basically learning how to do things. So Option Pit Live, probably the best daily education product out there. But of course, it's ours, so that's what I'm going to say. Anyway, our Saturday class is about trading butterflies. Specifically, we're going to concentrate on short and midterm flies, in the money and out of the money flies, and flies of different strike and ratio. Okay, all flies, all of this Saturday. Mark and I will be teaching. The class starts at 9:30 Eastern. So I just had a couple of questions on VIX. So let's get to. So basically, I think right now things are semi-driven by headlines again. I think Washington is having a little. Let's just go to the Wall Street Journal. Washington, you got Trump saying this, and then Congress saying that, and the FBI saying that, and blah blah blah. Anyway, all it is actually kind of locking things up in the short term. So as far as the vol futures go, we noticed this last week. Why is the VIX up? Because of the weekend effect. Okay, it was decayed pretty substantially going into Friday. If you notice, right, it closed sub 11 by a couple of cents. That's a huge low print for VIX. We have March expiration is not next week, but the following week for VIX. So there's still a little premium left in all these futures. So again, VXX is priced off of futures. If you take our Vol Masterclass, you learn all of that stuff. As soon as we're done with the cycle, we'll post the archive for sale in our store. But if you want to learn about volatility, how the vol futures and volatility are all linked together, obviously I highly suggest the class. However, for right now, this is just an artifact of implied volatility catching up with the day. Okay. Now, what I do notice is we're about. Remember, the low tick for I think the March serial future was $1.50 or so. We're very close to that right now. Okay, the April future is a full $3 over. I would say that's kind of normalish, considering what's going on. What we want to start looking for is some of the other contracts as we kind of get closer to this French election. So the reality is, we have some turmoil. It's not even turmoil. It's just a bunch of politicians yelling at each other. I don't think VIX is up that much considering the SPX is down. But ultimately, you take your cue from the futures, and that's what we're looking at. VXX is driven by the futures. XIV is the inverse product. Right now, if you look at all the VIX futures, they're just not doing very much. They're all just kind of sagging under the weight of decay. VIX did touch below 10. I'm sorry, below 11. So that is near, that's a near low close for us this year. So there isn't a lot of short-term volatility in the market, and there's no other way to describe it besides that's what it is. There might be volatility in Washington, but it hasn't translated here yet. The next thing you look at is where is vol of vol? Okay, You get a little uptick, but let's look at 60-day vol. Okay. Whoops, let's get the right chart. That's what I wanted. A little uptick. It's not in the 70s. It's here. It's not super high. I think it's starting to gain a bit as this French election thing happens. We keep talking about it. The only reason why is because it mattered for Brexit. It mattered for our elections, even though for a while the market didn't care, then it started to care. We have to wait a couple weeks for it to start to kick in, I think, a little more when that volatility starts to be priced, and VIX prices that. Right now it's starting to price those April contracts, but not deep enough. You know, that May cycle is that late April, early May cycle is holding the elections here. So if you just look at SPX, you're going to get kind of the glacial move for volatility. You know, but right now we're looking at the 7 handle for next Monday, again with 2 days of weekend in there. As you move out tomorrow, 8, 8, 8, 9. Even with these elections, 971, 10.5. I mean, that's just not. It's elevated for sure, but it's nothing. It's nothing crazy. However, what you do start to look at is you look at the level of contango, right? You have a late March at the money contract. Now the 27th, I believe, that is a Monday, so that's going to be a little cheaper. Let's go to the Friday date, right? That's the 24th, even 860. So there's about 3 points of volatility for that. We'll call it April 20, like 6-week span. So that's definitely the market pricing something, even though nothing's happening right now. Simple as that. So we expect vol to start to pick up, as in vol defined by VIX to pick up as we go forward. Right now, there's not much. You know, if we're going to have a low tick for volatility, it will probably be in the March cycle, and then I would expect it to start to pick up again, unless one of the spats actually turns into something besides just a spat. Other than that, I'm still looking at financial stocks, although today they're having a little bit of a pullback, but everything's having a bit of a pullback as, you know, you've got North Korea sending missiles, you know, launching missiles, you have spats and what there's a lot of confusion. There's certainly, at least for now, they're not rallying. However, gold isn't up. Treasuries aren't up. When you just look at the risk products, there's no bid for that. So, you know, if we stay this way for the whole day, it wouldn't surprise me. If we end up a little bit on the day, it wouldn't surprise me. I still like banks. I still think the volatility of the banks are relatively cheap, given how they're moving. I think that's really the best play overall. Short term, if you're looking for volatility trades, you're looking at maybe selling some of the downside of the vol products out of the money. Meaning, like for VXX, we'll try to find puts to sell and stuff like that. Because, again, we're at this level. It's hard for vol to go a lot lower, but it still can. And obviously, you know, the upside, it feels like vol could catch a bid at any time, but I mean, you're just looking at VIX today right now, a tick chart, and it's just slowly sort of petering away. So it's all very underwhelming overall. And I think until we have a change in that tone, maybe a change in the tone of Washington to get back sort of on the bullish train, or the tone there gets worse, making people a little more bearish, I think that's what you're going to get. And just stay with the things that have been relatively strong. But volatility overall, I think, you know, I still expect to see flattish to lower short term, and then it starts to pick up in a little, you know, in a couple of weeks or so. But I'm not expecting a whole lot of movement one way or the other, to be honest. All right, everybody, have a good day, and I will talk to you all later.